Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Guangzhou Rural Commercial Bank Co. Limited annual report. Guangzhou Rural Commercial Bank Co. Limited offers a wide range of banking services to cater to various needs of its customers. At the core of its operations are corporate banking and retail banking segments, which provide loans, deposits, and other financial products to businesses and individuals. The bank's financial market business segment is another key area of focus, offering investment banking products, short-term and long-term loans, domestic and international settlements, and bill acceptance and discounting services. It also provides financing services, e-bank services, financial leasing, and securitization of credit assets. In addition to these core services, the bank offers a variety of other products and services, including money market placements, investments and repurchasing, foreign exchange transactions, foreign currency remittance, and debit and credit cards. It also provides payment collection and insurance agency services, safe locker facilities, advisory and attestation services, securities investment fund sales business, and trades in government and financial bonds. The bank has a strong online presence, offering internet, mobile, and WeChat banking services, as well as an e-commerce platform called Jinmi Mall. Its outlets are equipped with ATMs, self-service inquiry terminals, smart service terminals, and smart banking outlets, making it convenient for customers to access its services. Overall, Guangzhou Rural Commercial Bank Co., Limited, provides a comprehensive range of banking services to meet the diverse needs of its customers, from corporate clients to individual consumers. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a financial institution can be attributed to several key factors. Firstly, the expansion of green loan scales has contributed significantly to revenue growth. Additionally, increases in agency and custodian service fees, settlement and electronic channel business fees, and bank card fees have also played a crucial role. Furthermore, cross-border trade facilitation settlements exceeding $100 million, investment banking business supporting the development of the Guangdong Hong Kong Macau Greater Bay Area, and retail deposit growth have all contributed to revenue growth. The institution's efforts to optimize loan products, enhance service efficiency, and implement special preferential activities have also driven revenue growth. Improved relief policies, increased exploration of potential customers, comprehensive enhancement of financial services, and the release of a special action plan to boost consumer market development have further contributed to this growth. The development and launch of new online consumer loans, such as Jinmi Home eLoan, and strengthened technology empowerment and digital transformation have also been significant drivers. However, there are also primary drivers of revenue decline. Guarantee and commitment service fees have decreased by 25.99 RMB million, while acceptance fees have decreased by 2.87 RMB million. These decreases in service fees have contributed to a decline in revenue. The net income of the company experienced a slight increase of 2-3% from RMB 2,415.54 million to RMB 2,463.93 million. However, this growth was not uniform across all aspects of the business. A closer look at the profit margins reveals that while the operating margin decreased by 0.08%, the net profit margin saw an increase from 15.51% in 2024 to 16.04% in 2025. The reasons behind these changes are multifaceted. One key factor was the growth in small and medium-sized loans, which experienced a significant increase of over 15% for the second consecutive year. The successful implementation of the Enterprise Co-Prosperity Plan also played a crucial role, as it provided credit support to technology-based enterprises. Additionally, the asset management business saw substantial growth due to the introduction of the 5 Riches product system and enhanced investment capabilities. Furthermore, the company's pricing flexibility improved through the adoption of a market-oriented mechanism, leading to higher asset yields and overall competitiveness. These factors combined to drive the increase in net profit margins, despite the slight decline in operating margins. Overall, these changes demonstrate the company's ability to adapt and grow in response to changing market conditions. The company's financial performance indicates a healthy trend of generating positive operating cash flow. According to the provided information, the net cash flow from operating activities for the year ended 31 December 2025 was a significant RMB 12,372,614. This substantial amount signifies that the company is successfully managing its day-to-day operations and generating sufficient cash to cover its expenses. The positive operating cash flow is a crucial indicator of a company's financial health, as it demonstrates its ability to meet its short-term obligations and invest in growth opportunities. The company's debt level has experienced significant fluctuations over the years. Initially, it increased by RMB 8,201 million from RMB 76,009 million to RMB 84,210 million. This trend continued with an increase of RMB 175 million, 167,044 from RMB 998 million, 919,124 to RMB billion, 274 million, 86,168. However, in the following year, there was a slight increase of plus 6.4% from RMB billion, 274 million, 19,168 to RMB billion, 359 million, 1,325. Furthermore, the debt level increased from RMB billion, 254 million, 31,473, 2024, to RMB billion, 278 million, 55,535, 2025. On the other hand, interest expenses have shown a notable decrease. According to various summaries, there was a decrease of minus 11.9% in interest expenses from RMB 24,345.23 million to RMB 21,448.08 million. This trend continued with a decrease of RMB 12,897.15 million, minus 11.9%, and RMB 353 million, 21.94%. The majority of the summaries suggest that there was a decrease in interest expenses, although one source indicates an increase from RMB 4,111,084 in 2024 to RMB 3,678,951 in 2025. The company's management has outlined a clear vision for its future growth and development. By 2025, the goal is to become a first-class commercial bank in China, driven by innovation and strategic oversight. The bank will play a leading role in green finance, leveraging its strengths as a local financial institution to support key national priorities. To achieve this vision, management has identified several key areas of focus. These include advancing digital transformation, enhancing technology governance, and improving financial digital capabilities. Additionally, the company is strengthening its risk control mechanisms and proactively assessing changes in domestic and international anti-money laundering landscapes. The company's strong operating income and significant increase in profit before tax demonstrate its ability to execute on its strategy. With a focus on driving business innovation and efficiency, gains through fintech construction and digital transformation, management is confident that the bank will continue to grow and thrive in the years ahead. There are no notable acquisitions or divestitures to report. According to the provided information, page 262 explicitly states that there are no acquisitions mentioned. Similarly, it is stated that there are no divestitures mentioned. This indicates a lack of significant transactions involving the purchase or sale of assets or companies within the given context. The company has a history of paying dividends to its shareholders, with the most recent payment being RMB 0.45 per 10 shares in 2024. This trend is expected to continue in 2025, with a proposed cash dividend of RMB 0.46, tax-inclusive per 10 shares, scheduled for payment on or before July 24, 2026. In addition to paying dividends, the company has also been actively buying back its own shares through cash dividend distribution. Over the past 3 years, the company has allocated significant amounts towards share buybacks. RMB 12.02 billion in 2022, RMB 5.76 billion in 2023, and RMB 6.48 billion in 2024. This demonstrates a commitment to returning value to shareholders through both dividend payments and share repurchases. That concludes the financial summary for Guangzhou Rural Commercial Bank Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.